and welcome to In Depth. I'm Teena Jha. For several decades, Switzerland has been the world's biggest tax haven. The country banks nearly one-third of the world's offshore wealth. But how did the Alpine country earn this distinction? The answer to this are the banking secrecy laws in Switzerland, which make it punishable to reveal a client's identity or information. Also, Switzerland allows incorporation of offshore companies, which means they are not obligated to file accounting records and financial statements with the registrar of companies. Such rules, no doubt, have helped in promoting illicit financial activities worldwide. But now, under pressure from countries to curb illicit financial flows, Switzerland is all set to amend its anti-money laundering law. What will be the effect of this measure? How will it help curb flow of illicit money? And most importantly, how will it benefit India? That will be our topic today in In-Depth. The Swiss Federal Council has initiated consultation process to amend the country's anti-money laundering law. The proposed bill takes into account certain key recommendations from the Financial Action Task Force Mutual Evaluation Report on Switzerland based on a review conducted back in 2016. Illicit financial flows are illegal movements of money or capital from one country to another. Illicit money is usually generated through bribes and theft, organized crime, and corporate dealings like tax evasion and false commercial transactions. Since they are largely invisible, illicit money flows across borders and are difficult to measure. Combating illicit financial flows is a major challenge for all governments and a priority for the international community. Illicit financial activities hamper economic growth and development as countries lose revenue, investment, and markets. The impact is particularly severe on developing countries. According to Global Financial Integrity, a Washington-based research and advisory organization, developing countries are losing more than $1 trillion a year to illicit financial flows stemming from crime and corruption. Several initiatives have been taken to limit tax evasion and address illicit financial flows in the last 2 decades, but these efforts have not been sufficient to stem the flow of money. Secrecy in banking systems of countries further help in illicit financial flows. Switzerland tops the list of preferred tax havens due to low taxation of foreign corporations and individuals and secrecy in banking.
Swiss banking has traditionally been an area of private banking where the ultimate customer is sometimes not known. So it has often been a place where people park funds in complete anonymity, and then they use them also in anonymity. Now, worldwide, the laws are tightening to get rid of anonymity because often this kind of slush money is used to finance a lot of illegal activities, including terrorism.
But now, Switzerland is also stepping up efforts to curb illicit fund flows. The Alpine nation plans to amend anti-money laundering law, wherein financial intermediaries will be required to verify information on beneficial owners. It also plans to bring a provision to improve the effectiveness of suspicious activity reporting for money laundering and terrorist financing. Once the law is amended, due diligence obligations will be introduced for certain services which concern the establishment, management, or administration of companies and trusts.
There is a pressure on countries, and especially like countries like Switzerland, to reduce the space that it allows for those sort of banking provisions. And Switzerland, thanks to the pressure being applied by lots of countries, including India, has said that we would may go in for a radical change in many of the laws.
The proposed law in Switzerland seeks to force those associations at risk for money laundering and terror financing to enter the commercial register. Besides, it attempts to crack down on the use of criminal funds to buy precious metals and gems by lowering the cash payment threshold. Last year, India and Switzerland inked a pact for automatic exchange of tax-related information. Prior to that, a joint declaration was signed with Switzerland to exchange information which meant India would be given information on accounts held by Indian residents in Switzerland automatically. Bureau Report, Rajya Sabha TV. Swiss banks stand apart on account of their secrecy regarding their accounts and banking transactions that they provide to their clients. Even the rules on opening accounts in Swiss banks are not complicated. Anyone from any part of the world can open these bank accounts.
Under Swiss laws, anyone above the age of 18 years can open an account in a Swiss bank. Accounts can be opened in any currency, although most Swiss banks prefer Swiss francs, US dollars, euro or pound sterling. Minimum balance to open accounts varies from $1,000 US to $1 million.
Various banks in Switzerland have their own ways of permitting account holders to open accounts. Often it is these introductions are done in privacy. Sometimes the banks do not even insist upon the personal appearance of the account holder or the beneficial account holder. Corporations use these banks to open accounts, and all that the bank knows is that all messages regarding the account are only to be sent to a post restante address or to even a post box.
To open an account in any bank in Switzerland, one has to apply online. The bank asks for several documents to establish a proof of identity and sources of income, which can be sent by mail. The documents can also be sent via email. Documents need to be verified by government agency. Passport is essential, while driving license is not accepted as proof of identity. Account holders have to declare the financial background, including liquid assets and property. The account holder also need to certify the documents are authentic.
Anybody can, any Indian who has been employed in Switzerland, supposing you, me, anybody who's working in Switzerland can obviously have an account, and that will be like a normal account anywhere else in the world. It will have the name of the person, the address of the person and everything. The difference is the persons who want a special treatment ask for a numbered account. And these are the numbered accounts where the name of the person is not available on the banking register. It's not open to other authorities to see. There's only a code that is there which is given in place of the person's name.
Known to maintain secrecy about account holders, Swiss banks provide another option to keep their clients' account anonymous. This is by offering customers the option of opening a numbered account. These are not identified by names of account holders but only identified by numbers. Numbered accounts are not as easy to open. They require an account holder to physically go to bank and complete the account opening process in person. These accounts require an initial deposit of at least $100,000 and cost about $300 per year or more to maintain.
If you wanted to keep your money away from the prying eyes and the tax authorities of your home state, the Swiss bank was traditionally the most favored destination for such activity.
Swiss banks also issue credit cards at a fixed fee that can be used to make purchase as well as cash withdrawals in ATMs across the world. There are over 400 banks in Switzerland, out of which UBS, a United Bank of Switzerland, and Credit Suisse are globally most popular. Bureau Report, Rajya Sabha TV.
Why do people, especially black money holders, favor Swiss banks? Why do big businesses and celebrities put away their money in these banks? Let's understand what's special about these banks and what facilities do they give to their account holders. Swiss banks are well known for banking secrecy and strict bank-client confidentiality. These rules legally prohibit the banks to disclose client information to third parties without their consent or an accepted criminal complaint. Many banks in the world, including India, have strict banking laws where every transaction is monitored by the government agencies. Swiss banks, on the other hand, guarantee unauthorized security and confidentiality to the account holders.
जो आदमी पैसा रख रहे हैं बैंक से पैसा तो वो तो इंटरेस्ट भी मांगेंगे, लेकिन स्विट्जरलैंड में अभी बैंक में पैसा रखने से आपको इंटरेस्ट देना पड़ता है. भारत में जैसे आपको इंटरेस्ट मिलता है वहां पे इंटरेस्ट देना पड़ता है। तो इसलिए किसी आदमी अगर $100 रखें तो 1 साल के बाद वो $100 $99 हो जाएगा, क्योंकि उसमें इंटरेस्ट रेट नेगेटिव है। तो ये भी नहीं कि लोग ऐसे जाके पैसे रख देंगे कि भाई काला धन है इसलिए किस तरह रख दो, क्योंकि अगर टैक्स से बचा है ठीक है, लेकिन अगर इंटरेस्ट देना पड़ रहा है तो एक तरह से वो भी एक टैक्सेशन हो रहा है ना।
Swiss bank rules are actually well suited to create and store black money. It is a crime for most Swiss banks to disclose names and information of their account holders. In such cases, strict action can be taken against the bank. Swiss banks are ideal for black money holders since the country's banking laws forbid bankers to reveal that accounts of individuals even existed. Another reason people deposit money in Swiss banks is that the rules for declaring the source of income are very lenient. Customers only have to pay a fee to the bank to deposit their money. They can also open numbered accounts that ensure anonymity. If you lose your money kept in a Swiss bank in a natural disaster or fire, the bank will return the money without any conditions. Money is deposited in the bank in Swiss francs, which is considered the safest currency in the world. The economy of Switzerland or other banking havens are usually strong, which minimizes chances of losing money.
Sometimes the banks do not even insist upon the personal appearance of the account holder or the beneficial account holder. They also, corporations use these banks to open accounts, and all that the bank knows is that all messages regarding the account are only to be sent to a post restante address or to even a post box.
You can close your Swiss bank account at any time with no restrictions or cost, which is what attracts the most powerful and richest people of the world to these banks. Bureau Report, Rajya Sabha TV.
Time for a very short break on the program. We'll be right back.
Watch The Big Picture with me, Frank Rausen Pereira, at 6:30 p.m.
When these strong leaders come in together with strong egos, how hopeful are you that this kind of a coalition which you are talking about is going to be successful?
They have to contest Lok Sabha elections collectively, state-wise, and ultimately that figure which will come at national level, if our effort should be to see that they will come to provide a viable alternative. And I don't think we should make that issue as a prestige issue.
Your party is almost open to join hands with UPA again. So when are you joining UPA?
After our meeting, after our collective thinking, something will emerge.
Are you going to contest in 2019?
No. I'll prefer to go to Rajya Sabha.
Watch an exclusive interview with NCP President Sharad Pawar only on Rajya Sabha TV.
Tales that inspire. Stories of social change. A salute to diversity. Promoting public discourse. Events that motivate. Inspiring the innovative spirit. Watch Rajya Sabha television documentaries.
Welcome back. You're watching In Depth. All of us want our money in banks to be safe and confidential. Swiss banks are famous for doing these two jobs very effectively. Switzerland's Banking Privacy Act prevents them from sharing any account holder's information with anyone. Let's see how these Swiss traditions evolved over the decades.
Banking in Switzerland began in the early 18th century, and in 1934, Swiss banking privacy law was first codified, which made it a crime to disclose client information to a third party without the former's consent. According to this law, all Swiss banks have to work under the supervision of the Swiss Federal Banking Commission and follow the regulations made by it. In 2009, certain amendments were made in this law, and on 1st January 2009, Swiss Financial Market Supervisory Authority, or FINMA, was formed with the purpose of supervising these banks. The main work of FINMA was to see whether the banks are working according to the government's regulations. On receiving any authentic complaint from a foreign government, FINMA can give official information about a customer.
Worldwide, the laws are tightening to get rid of anonymity, because often this kind of slush money is used to finance a lot of illegal activities, including terrorism. Consequently, the Money Laundering Act in Switzerland is also being amended, and the Swiss government is in a consultative process up till the 21st of September, where it has asked for suggestions from all stakeholders and members of the public on exactly what amendments have to be carried out.
Though banking privacy laws exist in every country, but what makes the one in Switzerland special is that until someone is found to be involved in a financial crime, which is considered a crime in Switzerland too, the police, Department of Revenue, the National Bank or the court cannot ask for any information from any bank about any of its clients' accounts. According to Section 47 of the Swiss Banking Privacy Law, every employee, officer, banking entity, agent, auditor and even the Bank Monitoring Commission in Switzerland are bound to keep their clients' information confidential.
Indian government tax authorities have clear information about somebody who has evaded tax and can give that information to Switzerland to check out if they have anything more to add. Then they in turn give that information to India. However, it's all prospective. It cannot be on retrospective things, in the sense that you cannot chase something in the past. But if something is going to happen in future or has been happening of late, then that information can definitely be shared. So that has started happening. So Switzerland has been sharing. In fact, quite a few information dockets have come to India. Unfortunately, we do not get to know too many of those. One of the reasons for that is that these information are not supposed to be made public. They are supposed to be given in confidence to the tax authorities, who can then run cases in the courts.
Swiss banks not only keep their clients' information confidential, but also take care of their money even after their death. They ensure that the account holder's money is only handed over to their heir after death. For this, there is a provision to provide account information only to the true heir of the account holder, one who has a certificate issued by the court. In cases of corruption, terrorist activity or black money hoarding by the account holder, a bank will accept the request for disclosure of details from a foreign government only when this request comes through the Swiss government or there is strong evidence about the suspect and the Swiss government or a Swiss court has approved the said information. Bureau Report, Rajya Sabha TV.
Swiss banks are not the only safe havens for black money. Many other countries and their banks also facilitate stashing away black money or illegally earned money. Which are these countries and how do they facilitate black money holders? Let's find out in this report.
In 2016, raids on the Panamanian law firm Mossack Fonseca unearthed 1 crore 15 lakh secret files. They came to be known as the Panama Papers. In them were details of how people across the world were evading taxes and investing their money. People generally stash money in countries where they don't have to pay too much tax. Such countries are called tax havens. But even the Panama Paper Leak did not disclose a lot about black or illicit money. A few days later, there was a Paradise Papers case. Over 1 crore 34 lakh documents exposed various fake companies in which black money was stashed. Names of various Indians also came up in both cases. But the investigation in both cases was limited to tax evasion and unauthorized investment cases.
The Swiss formula was then taken on by a lot of smaller countries which wanted to become financial hubs. You had the small European country of Liechtenstein. There were also countries in the Bahamas and in the West Indies like countries like St. Kitts, Antigua, all these are the Cayman Islands and the British Virgin Islands. These are small countries or principalities which often have followed the Swiss model of providing greater anonymity.
Switzerland alone has 400 big and small banks. Under the 1713 Great Council of Geneva rules, these banks keep track of clients but do not share information related to them, since sharing customer information is a legal offense there. However, with time, the methods to stash black money are also changing. Now, people do not directly deposit money in banks. They invest in dollars and other foreign currencies, besides investing in Bitcoin or digital currency. In any case, people are always on the lookout to invest their black money in countries where tax rates are minimal or have no tax at all.
There are some countries, about 29 countries or so in the world, small islands and others, which have and which used to offer this sort of facility. They were all they were largely European and a couple of them towards Americas, but largely European countries who had islands and other special categories, states, which had this facility. Switzerland being the largest of the countries with the bank account, and by itself being a very large economy, has been holding out. And now it's time that it's also starting to loosen up.
Panama, Switzerland, Hong Kong, Mauritius, Monaco, Andorra, Bahamas, Bermuda, British Virgin Islands, Belize, Cayman Islands, Channel Islands, Cook Islands, and Liechtenstein are famous tax havens. Money flows from across the world to the banks in these countries. Apart from these, countries like Dubai, Bahrain, Austria, Belgium, Singapore, and Malaysia are also popular destinations for black money. Here, people store black money by investing in shell companies and exploiting loopholes in FDI rules. This money includes not only funds saved through tax evasion, but also earnings that have come from unauthorized means. Such means include transactions through trade in arms, narcotics, and human trafficking. These banks are used by world mafias, smugglers, and terrorist organizations. Apart from this, money earned from corrupt practices in politics and business are also stashed here. Across the world, there are many companies like Mosaic Fonseca that help people to keep unauthorized money available for use in the system. Bureau Report, Rajya Sabha TV.
And that's it from us in this edition of In Depth. We'll be back same time tomorrow with a focus on another subject. Before wrapping up, let me remind you that you can also watch all our episodes on YouTube as well as Twitter. You can also leave behind your valuable suggestions and feedback. Thanks for your time.